You hear about the stock market all the time, right? Stocks are up, stocks are down. But do you ever just stop and think, how do people actually do that? How does a headline on the news turn into a piece of a company that you literally own? Well, that's exactly what we're going to dig into right now. I mean, it seems like it should be easy, doesn't it? You see a stock you like, you just buy it. But it's not quite that simple. You can't just walk up to the stock market and start shopping. Turns out there are some pretty serious gatekeepers. Yeah, exactly. Think about the New York Stock Exchange or NASDAQ as these huge, really exclusive clubs. You can't just stroll in off the street and start making deals. To get on the trading floor, you have to be a licensed member. So for the rest of us, that front door is basically locked. We need someone who already has a key. So who has that key? This is where our essential middleman comes into play. This is the one crucial link that connects you, sitting at home, to the entire global financial market. So let's meet them. And that key holder is called a broker. The easiest way to think about them is as your own personal agent for the world of finance. If the stock market is that giant members-only club, the broker is the person with the all-access VIP pass. They've got the license, they've got the connections, and they get inside to make the trades for you. Okay, but you've probably also heard the term brokerage firm. So are they the same thing? Not exactly. And, knowing the difference is actually really helpful. So let's break that down real quick. Here's the easiest way to keep it straight. The brokerage firm is the company. It's the big brand name where you open your account and deposit your money. The broker, on the other hand, is the licensed person who actually has the legal authority to go out and make a trade on your behalf. So one is the company that gives you the platform, the other is the professional with a license to actually use it. So what is a broker really doing? Well, it boils down to three main jobs. First, and most obviously, they execute your orders. You say buy, they buy. You say sell, they sell. Simple enough. Second, they're the intermediary. They handle all the background plumbing to make sure your money goes where it's supposed to and the shares end up in your name. And third, this is a big one, they are seriously regulated. They have to be licensed with groups like the SEC and FINRA, which are basically the referees making sure nobody's cheating. All right, so you get it. You need a brokerage, but they are not all created equal. This is kind of where you get to choose your own adventure because they really come in two main flavors. And the one that's right for you totally depends on what kind of investor you want to be. And this table just lays it all out perfectly. On one side, you've got your discount brokers. Think of the big names like Schwab or Fidelity. Their entire focus is on low-cost, do-it-yourself trading. You get a slick online platform, research tools, and the major selling point, often $0 in commission. Then on the other side, you have the full-service brokers, like a Merrill Lynch or Morgan Stanley. This is the white glove service. We're talking personalized financial advice, portfolio management, retirement planning, the whole shebang. Of course, the trade-off is the cost. You're going to pay higher fees for all that hands-on expertise. So that's all the theory, but what does it actually look like in the real world when you decide to buy a stock? Let's actually follow a single trade from the moment you click buy to the moment you become a shareholder. So let's meet our investor, Alice. She's what's called a retail investor, which is just a fancy term for a regular person like you or me. She's done her homework. She's decided she wants to buy 100 shares of a company called Acme Corp. She's got her money ready in her discount brokerage account. So what happens next? The whole thing happens in a flash, but there are 4 key steps. Step 1, placement. Alice logs into her app and places the order. Super simple. Step 2, routing. Instantly, her brokerage's computers find the best place to buy those shares and send the order there. Step 3, confirmation. The trade goes through and boom, a notification pops up on her phone saying it's done. And finally, step 4, settlement. This is the behind-the-scenes part where the shares are officially transferred and held in her account. For Alice, the whole thing felt like one single tap. So, what did all that incredible, high-speed, globe-spanning technology cost her? How much commission did Alice have to pay? Probably 0. A big fat nothing. And that is probably the single biggest revolution to happen in investing for everyday people. The fact that this is now possible has completely blown the gates off the market. The key isn't just available. For many, it's now free. So when you boil it all down, that's the main takeaway here. Brokers and the firms they work for are the absolute essential link. They are the bridge that connects your personal savings to the massive engine of the global economy. And without that bridge, the rest of us would just be stuck on the other side. So just understanding how this system works is the first and honestly the most important step. The gate to the market is wide open, and the key is in your hand. So the big question isn't how do I get in anymore? The real question is, now that you're here, what are you going to build?